Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, October the 25th, 2013. A couple of announcements to make. We're going to look at a lot of charts. So right off the bat, look at the Dow 30 alerts. These are the individual companies that make it the Dow Jones Industrial Average. So there are opportunities here that we're looking at today, and some that I recommend you look at. And then also I want to show you how I pick them, and then you'll be able to use that for the markets as well. So one more thing before we go on, I want to point out that the chat room feature that we talked about, it's been updated, so it's now working again and in its right mind. So just refresh that page and it'll work for you just fine. The main thing to show you today is I want to look at a couple of individual companies that you could be looking for an opportunity to trade. If, for example, you were looking at the Dow and you said, well, I don't know how to trade the Dow, or I don't want to trade options, or I don't want to go buy an ETF or something like that, then you could find individual companies which are likely to track the Dow, because the Dow is made up of an average of individual companies. So there would be opportunities in there, and there are. And there's several that we've already actually taken advantage of. Let me show you some of these right quick. Okay, this is the AT&T chart we talked about back when it was going on. On this chart, we put the notation. And again, these charts are all kept on the free website, updated nightly. But wherever we see an opportunity, we think it's a buy signal or something like that, we'll let you know with the right arrows, and then we might put notes on indicating why we like it. And maybe it's a chart formation, we might draw it on there. Maybe it's a long-term comparison chart that we like. In this particular case, that's what that was. And this has made lots of money, and that's fine. Now there's other opportunities setting up. This is already run to the point that you don't want to be chasing it. So now you can look for other things, such as in this particular case here, Goldman Sachs. You can see that you had, again, the same pullback, the same buy opportunity, as long as this low point here was held. This is the blue line indicating the stop loss limit, and it did. And then you bounce up here, and now you can get some consolidation. That's what this little line here is indicating. And now what you see here is a breakout of that. So again, I'll be looking for this, and we got the tools. We're looking for this little breakout here to test this high here, and I come up with that by simply saying this is the first up leg, this is the consolidation, and then the second up leg will be the same size as this one. So I could measure this out mathematically and tell me that's going to be testing the previous high right there. It should also be noted that if you see a company like this, such as Goldman Sachs, which is going to be in the financial investment services field, then you can simply anticipate that the financials have been lagging this rally, and therefore all of the financials are likely to be setting up in a similar manner. So you could find several others. Maybe you didn't want to trade a stock that was looking at $162 per share. You wanted something a little cheaper or less expensive. Then you could go find another company in the financial services area that would be similar to this chart, when that it would be lagging the overall rally, but still breaking out. Okay, so there's things you can think about and look and use in your advantage. Now let's go look at some actual market charts. Okay, starting off, we're going to look at the AORD, the Australia market, and this particular chart, I'm going to show you what I look to do whenever I'm looking for individual companies. I want to compare the long-term and the short-term, and just because you got a short-term chart that's really bullish, if your long-term chart is showing topping signals, then the upside on the short-term chart is going to be limited and very dangerous because it's overextended, that kind of thing. So then I would look for, instead of trying to trade that, I would go find situation we had long-term chart was telling me there's a good quality buy signal and a bullish trend, and then again the short-term chart confirming that. So in this particular chart here, you can see again AORD. You can see that this was the great entry opportunity here that actually in this case I missed, and to buy at this point here, you're too overextended, so I wouldn't be chasing that. Yes, you can still press to the upside, and if you're trading that from earlier time period, that's on you, and that's fine. You just advance your stop and continue to ride that wave. But at this point, to take a new position here, it's not a good idea. This is not the best chart to do that with. Alright, here we are looking at the Dow Jones Industrial Average, and this one looks pretty sweet in a consolidation phase right here. So you're kind of doing this little number here, and then be looking for that to break out, basically is what you would be doing there, and that's what's going on right there. Alright, so when you get that breakout, you can look for this to keep up to the upside. That's, again, we showed you yesterday the Dow was showing another buy signal, and that's why we brought that one to your attention, because again it's still in this consolidation phase. It's lagging the rest of the markets. It still can break out here and go much higher, and you'll notice that if we look at some of the other charts, you'll see that they've already done that. Okay, again, now we're looking at the Dow Tran, Dow Jones Transportation Average Index. Again, long-term weekly charts. So these are 2-year weekly charts, and then here you can see confirmation of that bullish consolidation phase we talked about with the Dow Jones Industrial Average, expecting that to break out, and again confirmation by the trend. So this breakout is very strong, and your short-term charts are very looking very overextended, but this is actually just getting started to the upside here, and someone could argue that you have this right here, this first up leg here would be duplicated out the other side. Quick look here at the CAC French 40 Index. This chart, again, a nice move to the upside here. Back there in this time period, we were talking about that. At this point here, not where I'm going to be buying into this, not at all. So just sit back and leave it alone. Again, if we were to see a good sell-off, maybe we got close to the end of the year, people start talking about tapering again, and we saw something like this down here to the 50-period moving average, something like that, then yeah, maybe we look for an entry opportunity at that point, because you would still be in an uptrend like so. But at this point, to be buying right here, that's not where I want to be buying. Quick glance here at the MIB, the Milan Index, the same basic overall story. A nice move to the upside here. That's great. You can keep pushing to the upside, but this is not where I want to be doing my buying either. Quick glance here at the German DAX Composite, same basic overall story. All of Europe is basically a no-no for me right now. It's just too overextended at this point in time, and that's not where you do your buying. Quick glance here at gold, and again, we talked about this yesterday. We'll look at silver as well today, but gold again has been in this downward move here. We talked about that when we were selling this, made a lot of money on that move down here, and then we kept doing this, and then all of a sudden you get a high point here, which took out this one, which brings into question, is something changing? If it is, the next pullback will be a buy opportunity, and you will not take out this low point here. That's exactly what you saw, and we just reversed here and started to move higher. That means buy pressure that was here is now advanced to here. That means also the sell pressure that was at one time here is now backed off to here. This is starting to show a change in direction. Now you look for this to be tested, as you've just turned around and bounced up here, and you're going to come back up to this level. This is an easy trade, the beginning of a reversal from a downward trend to an upward trend. And if actually go look at the long-term picture, like a 10-year chart, you would see that. Let me go ahead and do that real quick. Okay, this is the gold monthly. Everyone is kind of represents a single month with trading activity, but this is over the past 20 years. So you can look and see what's going on with gold here. You have a massive breakout after you had this consolidation phase. So this right here, this high point, that will be our line in the sand, right? That's our previous resistance point. We're going to look for a breakout there. That's the start of the move. Okay, so here we have the breakout, the consolidation. Upon that, finding previous resistance, now acting as support, and then we take off to the upside. Here we go, up, up, down. All we're doing is still a very bullish move. So all we're looking for here is a continuation of the upward move. That means you go back up to the previous high as a test. So this is what, 2,000 an ounce. So that's quite a bit of a move to the upside here, and that's again why I wrote out yesterday's video telling you to look at gold and silver for big moves in the future. Quick look here at the Hong Kong Hang Seng Index. This one again is just consolidating. A lot more volatility in this chart, so that's not something that you want to be buying up here. You could actually get a lot of volatility pull back down still. So leave it alone for now. It's just come up here. You had this uptrend still going on, and then you just started to consolidate, right? Okay. And now, if you get into a little pullback here, you're going to look for something like that, and that would give you what? Inverse head and shoulders pattern? Absolutely. So this is something to keep an eye on for later. Right now, it's not somewhere to buy. Let it pull back a little bit lower. Typically, when you have an inverse head and shoulders pattern, the shoulders will be roughly in line with one another. That means that the low point of one shoulder will be roughly the same level as the low point of the other. So you get a little bit more weakness here, and then you can start to see a reversal, and then you might get interested in that particular case. You're looking for this to then test the previous high, and then you would draw a neckline like so, and then once you broke out, you would measure this distance here and say, okay, that out of the top, and so forth and so on. Alright, a quick look here at the India Bombay Stock Exchange, same consolidation where we're seeing a lot of other charts. Here's the resistance, 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 breakout. So let's just draw ourselves a little line like so. And in this particular chart, you got a little bit cattywampus. Here you go, like this. We note the low points, and then we took out a low, and we come back up here, and we consolidate, and we break out. It's not the best way to see it, so I'll let it pass, but you could still be a buyer here with the stop right here. Quick glance at the Japan iShares EWJ designed to track the Nikkei, and in this particular chart, again, it's just consolidation. I'm not a huge fan of this chart here. You got high point resistance, and then again resistance, resistance, resistance. So we just draw ourselves a little line right here off the highest one, and so you break out of that, and okay, you can be a buyer in that scenario. This is kind of difficult to draw a trend here. Whenever you're looking at a derivative, in this case, it'd be the iShares or ETF or something like that. You want to look more at the actual chart of the Nikkei as opposed to the derivative, because it'll be the actual chart that's guiding you. The derivative isn't always going to track it tick for tick, so it's important to read your chart on the Nikkei, not the iShares. In this particular case, just looking at it, I'm not all that interested in it. The main reason being is you have this low point here, this low point here, this higher point here, so you're trending down, and then this right here, you can see if you try to break out here, you're going to end up with a bearish divergence, and it's not something that's going to be sustainable. So again, I'm looking for something that's pulled back, not breaking out in this particular case. Okay, the London Financial Times Index, or the FTSE, this is one I actually like. The Europe is about the only one. Again, the main thing here is you had this upward move, and this is a continuation of previous upward moves, so we're liking this, right? We go into some consolidation phase right here, and now we're kind of breaking out, right? That's what you're seeing right happen here. You could draw it like this if you wanted to and say it hasn't broken out yet. You could do a lot of different things with it. The main thing here is that it's still very bullish, and it's not as overextended, because look at this little red line right here. Here you got your support, here you got your support right there. This is the support line, and you just start to take off. So again, at least this out the other side would be making sense if you kind of drew it like this. You'd say this is the first leg, then the second one would come out at the top right here, and that would be testing the previous high, so forth and so on. The NASDAQ, no, not going to touch it. I know it's going to keep going higher. It doesn't make a difference to me. I am not going to touch this. Eventually, this one's going to hurt somebody, not me. Looking now at the XOI Oil Index, this one's broken out. Very bullish chart pattern's been going on for a while here. This is the blue line indicating. Here's the resistance line. Look for the breakout. Here's the uptrending the support line. You can see this just continues to grow and grow and grow and grow, and we're just going higher and higher and higher. Quick glance now at the UUP, the PowerShares DB US Dollar Index Bullish Fund, and this one's reflecting the dollar activity, and you can see we're just grinding lower here. High point, lower than the previous, lower series of highs, lower series of lows. Really nothing going on here but down. Quick glance now at the Russell 2000 Small Cap Index, another one very overextended in my opinion, and not going to chase it at this point or this point or this point. Just leave it be. That for a good pullback, you've had 1, 2, 3, 4, 5, 6, 7, 8 consecutive weeks to the upside. No market moves straight up or straight down. So whenever you have that many days to the upside, look for a pullback. Sorry, I shouldn't have said days. I should have said weeks. Looking now at the SPX, the S&P 500 Large Cap Index, the same basic overall story, still grinding higher. But that's fine, dandy, but there's not a place to be a buyer at this point in time, even though you only had 3 weeks to the upside and you can still press higher. This is not where you do your buying. Again, point out the high points on the Ultimate Oscillator, same thing. This is not a scenario where I want to buy. I'd like it rather, that's why I was showing you yesterday the Dow Jones Industrial Average, which is actually lagging. That would make more sense than trying to chase this. Looking now at the silver chart, again, if you were bullish on gold, you'd be bullish on silver. That would make sense. Same overall chart really happening here. A little bit clearer on the silver chart, actually. You can see in this case, you come up here, take out the high, and you're very clear, and then you pull back down, hammer candlestick formation off the low, higher highs. What do you think you're going to do here? You're going to buy and look for this to be taken out here. That would give you this move in this direction. And you could also look at this in the actual inverse head and shoulders pattern, which happens at bottoms to reverse to the upside. That would be your first shoulder here, that would be your head, this would be your second shoulder here, roughly the same level. And then when you get a breakout, you would do the measuring, that thing right like that, and simply measure it out, and then say that's going to be testing that high, so on and so on. Looking now at the TSX, the Toronto Stock Exchange, this one looks a lot like your XOI Oil Index chart. You can see this is the resistance line, you've got your breakout, there's your bullish uptrend line here, this is a buy. Looking now at the Wilshire 4500, this one, same as many of the other U.S. market charts, nice and overextended, hugging that upper Bollinger Band line, and it can continue to do so, but you've got multiple weeks to the upside, 1, 2, 3, 4, 5, 6, 7, 8, and that's not where you do your buying. Wait for a pullback, and again, these can come and take a couple of weeks to fulfill themselves. Looking back here, you had this nice move to the upside. We talked about this pullback here, and what happened, went pulled back for a few weeks, got a low point. If you were looking for an entry opportunity, you would have had one there, and you could trade this move to the upside and then continue that process. But again, this is not where you do the buying. You wait for the pullback. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Again, every chart I've shown you, as well as many more, are kept on the free website with my annotations on them. They're updated nightly, both the 3-month daily as well as the 2-year weekly charts for both the markets, as well as the Dow 30 alerts here. Market charts can be found right here, and again, there's a chat room and so forth and so on. Okay. God bless, take care, enjoy your weekend, be safe, and I will see you all. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.